The amount of Bitcoin available for purchase just got smaller. A lot smaller. While the market was frozen in hesitation, Michael Saylor just took another 22,000 Bitcoin off the table in a $2.1 billion strike. This wasn't just another corporate buy. This single move fundamentally changes the supply equation for every investor. It was done at a premium, directly into market fear, and it forces us all to ask one critical question. What does he know that the rest of us are missing? In this video, we are breaking down how Saylor pulled off this monster purchase, why Wall Street is punishing his company's stock for it, and the one hidden risk that could unravel his entire empire. We have to ask the big question. Is this the move that finally triggers a real Bitcoin supply shock in 2026? This is the story of how one man's relentless spending is an attempt to single-handedly bend the market to his will. You need to understand what this means, not just for Bitcoin, but for your own strategy. Let's get straight to the numbers because they are staggering. On January 19th, 2026, Strategy, the company you know as MicroStrategy, filed the official paperwork. They announced the acquisition of another 22,305 Bitcoin for a massive $2.13 billion. All of it bought in a single week between January 12th and January 19th. Here's the part you're not being told. This wasn't just buying a dip. This was an aggressive, almost defiant move executed at an average price of $95,284 per coin. That price is critical. It's significantly higher than their overall average cost, which points to one thing: pure urgency. Saylor isn't waiting for the market to give him a discount. He's hitting it with overwhelming force. This explosion of cash didn't come out of thin air either. It was choreographed. On January 18th, Saylor posted a cryptic tease on social media, a chart of the company's Bitcoin buys with a new, much larger orange dot, captioned with just two words: bigger orange. He essentially telegraphed a massive move, putting the entire market on notice. And this bigger orange event was just the climax of an already wild start to 2026. This was a serious escalation. Strategy kicked off the year by grabbing 1,283 BTC for over $115 million on January 4th. Just a week later, they slammed the accelerator, picking up another 13,627 BTC for $1.25 billion. In the first 3 weeks of 2026 alone, Saylor added nearly 38,000 Bitcoin to the company's balance sheet. This latest purchase brings Strategy's total holdings to a mind-blowing 709,715 BTC. That means a single publicly traded company now holds over 3.3% of all the Bitcoin that will ever exist. Their entire portfolio was acquired for a total of $53.92 billion, giving them an average cost just under $76,000 per coin. So even with the recent market swings, their position is deep in profit. This isn't a corporate treasury anymore. It's a financial black hole for Bitcoin, actively sucking supply off the open market at a faster and faster pace. But what's truly bizarre is how the market reacted. And this is where the real story begins. Now, this is where the story gets really interesting and where most people get trapped. With a $2.1 billion buy, you would expect the price of Bitcoin to rocket straight up. But that's not what happened. The immediate reaction was chaotic. When the news hit, Bitcoin was already trading under pressure, dipping toward $91,000 because of unrelated macro fears about new US-EU trade tensions. So Saylor didn't drop this bomb into a roaring bull market. He dropped it into a pool of uncertainty. He was buying the fear. But the most shocking part wasn't Bitcoin's price. It was Strategy's own stock, MSTR. Instead of soaring on this incredibly bullish news, MSTR stock actually plunged. How's that possible? How can a company make such a profoundly pro-Bitcoin move and see its own stock get punished? The answer is the key to understanding the entire risk of this operation. While the crypto world sees a visionary locking down a hard asset, Wall Street sees a flashing red light. Wall Street's anxiety boils down to three core fears. First, leverage. MSTR isn't just a Bitcoin stock, it's a leveraged Bitcoin stock. When Bitcoin's price fell 25% in the last quarter of 2025, MSTR amplified those losses, falling over 50% from its peak. It's Bitcoin on steroids, for better and for worse. Second, dilution. To pay for these giant buys, Strategy is constantly issuing new stock. This is a race against their own money printer. For this to work, the value of the Bitcoin they buy has to rise faster than they dilute their shares. And third, debt. The company has funded its Bitcoin hoard with billions in convertible bonds, and those bills are coming due. Investors are terrified of a doom loop, a nightmare scenario where a falling Bitcoin price could force the company to sell Bitcoin to pay its debts, which would crash both the asset and the stock. So while Saylor is playing the long game, the stock market is fixated on short-term risk. This sets up the most important question of all. Why is he accelerating his buying now, even with these risks piling up? The answer lies in his 2026 master plan. This is a huge moment, and this story is moving fast. If you're getting value from this breakdown and want to stay ahead of the game, hit that subscribe button and turn on notifications. We are tracking this every single day, and you are not going to want to miss what happens next. So if the stock market is reacting with fear, why is Michael Saylor doubling down harder than ever? This isn't a reckless gamble. It's a calculated strike based on a long-term vision for 2026 and beyond. To understand it, you have to see how he's funding the operation. So let's connect the dots. The money is coming from a non-stop capital raising engine. Strategy has perfected the art of using the financial markets to feed its Bitcoin acquisition machine. This latest $2.1 billion came mostly from at-the-market offerings, where they sold a mix of common stock and preferred equity. Filings show they raised about $1.83 billion from common stock and another $294 million from preferred shares in just 1 week. Since 2020, they've run this exact play over and over, spending nearly $54 billion to build their stack. Saylor's operating principle is brutally simple. He has stated that holding Bitcoin is a vastly superior use of capital than holding cash. From his perspective, with a core software business that has seen its performance decline, the smartest move isn't issuing dividends or buying back stock. It's converting the company's treasury into a global, decentralized hard asset. He believes Bitcoin's potential upside will more than compensate for any weak operating results. This brings us to his 2026 vision. Saylor is positioning Strategy for what he sees as an inevitable tidal wave of institutional adoption and global currency debasement. He's on record predicting Bitcoin is on a collision course with $200,000, maybe even $250,000 by the end of 2026. He is betting that institutional-grade infrastructure is developing far faster than new Bitcoin is being mined, and he is front-running what he expects to be a massive corporate supply crunch. Now watch what happens next. This aggressive start to 2026 is a strategic reset. The last quarter of 2025 was unusually quiet for Strategy as they dealt with the threat of an MSCI index reclassification. With that threat now off the table, Saylor has slammed his foot back on the gas. It feels like he's making up for lost time. He's not just buying Bitcoin, he's making a multi-billion-dollar bet on a future where today's prices look like a historic bargain. But for a bet this big, the risks have to be just as massive. You need to be aware of the high wire act this company is performing without a net. Now let's be real. We have to talk about the immense risks here because this is not a guaranteed win. Strategy is walking a tightrope, and the same things that make Wall Street nervous could blow up this entire strategy. What happens if this breaks? First, and most importantly, is the leverage. The company's mountain of convertible debt is the elephant in the room. These are real bonds that have to be paid back, with major due dates approaching. This is the doom loop scenario investors fear. If Bitcoin's price goes sideways or drops, the company could be forced to sell Bitcoin to service its debt, which could trigger a downward spiral for both the asset and its stock. While the company maintains it can handle its obligations, It has also admitted that selling Bitcoin remains a possibility as a last resort. The second huge risk is dilution. Every time Strategy sells stock to buy Bitcoin, each existing share you own represents a smaller piece of the company. So far, the rising value of their Bitcoin has outpaced this dilution. But the math tells a brutal story if prices go flat. If Bitcoin were to trade sideways for a long period, the effects of this dilution would become a massive drag on the stock price. And this is the one thing almost no one is talking about. The real danger isn't just a crash, it's a prolonged, boring, sideways market. In that scenario, debt obligations and share dilution become a slow poison, draining the company's value even if Bitcoin itself doesn't fall. This is why you see Wall Street analysts voicing caution. Their warnings aren't necessarily about Bitcoin's future, but about the unconventional and high-risk structure of Strategy itself. So, where do we go from here? Michael Saylor and Strategy just executed a $2.1 billion strike, taking their accumulation strategy to a new level for 2026. This confirms his unwavering belief that Bitcoin is the ultimate treasury asset. But the market's reaction is completely split, with Bitcoin absorbing the buy while MSTR stock got punished over tangible fears of leverage and dilution. What happens now is what really matters. This is a massive tell about a long-term plan to front-run institutional demand and position for a future where traditional currencies are worthless. Saylor is playing a completely different game on a completely different timeline than almost anyone else. He is betting the entire company that digital scarcity will ultimately triumph over short-term market anxiety. The split between MSTR's stock price and the company's Bitcoin strategy is one of the most fascinating stories in finance right now. It is a tug-of-war between Wall Street's short-term risk models and a long-term, uncompromising vision of the future. So I have to ask you, will Wall Street's fears prove right, or is Michael Saylor setting up the single greatest trade of this century? Drop your take in the comments below. And if you want to stay on top of every twist and turn in this wild story, make sure you're subscribed with notifications on. You can't afford to miss this.